Hey, my name is Václav, and today I want to explain when you should actually look for an investor if you are a startup founder or if you just launch your product or you're thinking about launching it and you're not quite sure whether you should use your own money or friends' money or investors' money, right? So let's breaking down real quick into 3 segments and take a look at it. So how do you know if your company is actually ready to get some capital, right? It's not always a good idea. And by ready, I mean you can always get other people's money, your friends' money, you can borrow money, but maybe you should hold on a little bit longer before you go to an investor, right? So for you, it's actually beneficial to get some traction, some validation, and show real monthly recurring revenue when you approach someone and you ask for his funding. There's a lot of people who go to investors, friends, family, fools, angel investors at the beginning stage where they're just an idea and they feel like they have this great idea and they need to bring it to the world and other people should give them money for it, right? While it's definitely possible to raise money on an idea, I think you should never do it. As an entrepreneur, it's your responsibility to actually find a need on the market and use the resources you have at your disposal, whatever they are, to craft a solution and test it out, do various A/B tests, a little bit drafting, pivoting. I mean, nowadays it's so easy to actually use some tools and AI-powered tools with AI agents to really do a prototype for free. You can get a prototype up and running in 2-3 weeks. You can get a sales website for $100 in various no-code solutions up and running in a week or 2. So why would you approach an investor when you have nothing? It doesn't make any sense, right? So sit down, spend some time crafting your solutions and then analyzing the results. And if you see that there is potential, then that's actually the angle you approach the investors with, right? So what you do is you will be like, hey, well, we were testing out, different things, and suddenly we just find an unmet need or a huge potential that we wanted to tap into. And without actually trying much, we actually made some money. And now we are here because we know that if we inject more capital, it's going to grow exponentially. And this is what the investor wants to hear, because investors, they are not here to just, give you money for fun because they have more than they need. No, regardless if it's their own money they made, selling businesses, doing work, or they have a fund managing other people's money, it's always about multiplying it. And that's why they give you the money, because they expect a multiple in years to come. But for that, you need to show them that you know what you're doing, and ideally you find something that no one has tapped into, and it can grow really well. Let's assume you have the MVP prototype and you have the minimum viable product, but also some minimal amount of money, or first customers, first adopters, and they're paying you something, and you're actually thinking whether you should hold on a little longer or you should go to the investors. And this is actually a good idea to hold a brainstorming session at this point, because you need to be really smart. And I can actually tell you what's the best way, because it really depends on your case. Because sometimes it might be great to just take a good deal, raise some money, $500K, $1 million, and just go there. Sometimes it might be actually much better to wait 6 months, especially if you see it's working and you have some capital to, some cash to spare, because then you'll be able to raise maybe 2 times that amount of money, or for 50% less percentage that you give away based on, let's say, a higher valuation. And this is very important from the opposite angle as well, because if you don't have all this, and let's say you convince someone, it's you don't really have that great of a thing, and you convince someone to give you some amount of money that you need for, let's say, 10-20% of your company, and you feel like it's going to be just right into the sun. And then after a year and a half, when you run out of the money, suddenly you realize it's not going that well, right? You didn't hit the metrics, you don't have the MRR, the sales, it's just not going there. I mean, it's working, things are fine, but it's just not there yet where like you really needed it to be. And of course, then you go to the investors, they're like, well, you have a good product, man, but like you're asking for way much money than we would actually give. So if you raise at a $5 million valuation at the beginning, and then let's say 18 months after you want to raise at 10 million, and the investors will be like, well, listen, we could give you maybe a 6 million valuation or 5.5. That's really bad. So you don't want to get it into a situation where in the future investors don't see, I don't want to say exponential, but high growth, because then they will either just tell you to disappear, like they don't want to invest, or they will really drive the valuation down, and that will hurt your current investor. He might even block you in that round if he has the permission in legally in your contract, or even if he cannot block you, it might just hurt both of you, and it may really block your next round. So you have to be very careful actually, and getting the money right now may feel good, but it may not be a smart move moving forward. And then of course the third part is like preparation, right? So you want to make sure that you have your business model really smooth out, that it shows potential, the market is growing, shows potential. You have a great team that you can showcase, that you have the best people, yourself included, on this with experience, understanding of the market and customers, and that you have like a winning 100% on your pitch deck. So you want to nail your messaging, and you want to understand like what goes on each slide and how to say it. Don't build good pitch decks, build best pitch decks. That's like 80% of what's going to secure your funding on the day one. Obviously there will be other meetings, but like first you need, it's like a headline, you need to attract it. So make sure that your messaging, business model, pitch deck, and traction numbers are on point. And if you do all of this, you think about it like whether it's a good idea, you waited a little bit, now you have traction, you think you can get a good deal, you feel like you can grow well, and you have all these things ready, then it's just start approaching, get out there and start raising right now. And make sure you subscribe, and if you join our community, because it's going to help you much quicker get to your funding round. And if you're planning on raising in the next 2 to 4 months, you should definitely be part of it and join today. Thanks for watching, and see you next time.